Ladies and gentlemen, welcome. My name is Alex Dworkin and I'm a managing partner at 40 Capital. We specialize in a very unique set of calculations that allow us to predict the stock market and individual stocks with amazing accuracy in both price and time, and typically on multiple time frames, whether we're talking about short term or long term, doesn't really matter. Now, I personally believe our work is nearly identical to what Jim Simmons was able to accomplish at Renaissance Technologies. So today is very important. I want to take some time. I typically don't talk about the market because it is typically our bread and butter, and I want to keep that information more or less private. But I'll take a look at the Dow Jones. I'll describe where we are in a long-term composition of the market. I'll take a look at our call for 2022 bottom, what it projected, which is exactly what we're seeing today. And then I'll go a little bit into what to expect going forward in terms of possibly seeing a very important top very soon, and then what happens thereafter. So I believe from a market timing perspective, you're going to find this update very, very useful. So before we get into what's happening today, I want to give you a little bit of a longer term overview of what we're witnessing today. And we are in a longer term bull market. That's an obvious statement. I think anyone can agree with that. But where the bull market began is controversial, I think, based on what I'm about to tell you. Because most people believe that we've seen the bottom right here. This sorry for the small chart, but I didn't have time to pull out my historical charts for recording this video. But basically, most people believe we've seen the bottom of the bear market that started in 2000 or arguably in 2007, here at 2009 bottom, and then subsequently we've seen the increase that we continue to witness today. That is not necessarily the case. So typically bull and bear markets last about 16 to 18 years and they alternate. This particular bear market started in 2000 at 2000 top from 1982 bottom. I would imagine pretty much everyone would agree with me on that particular fact. So it took about 18 years to get to 2000 top, and the bottom was actually right here at 2015, 2016 bottom. Okay, and I know it is not because this bottom was very close to the top here on. Once again, I'm speaking mathematically. We calculate the market in three-dimensional space, so mathematically speaking, this bottom was very close to the top. So basically, we flatline during that 15 to 16 year period of time. That's exactly what constitutes a bear market in this particular situation. Now, it is even more prominent if we look at the New York Stock Exchange, and if we look at the Wilshire 2000, which encompasses pretty much the entire market. It is not so much noticeable on the S&P and the NASDAQ, but if we look at the Wilshire 2000, for example, it is in your face. Basically, the bottom right here in 2015, August bottom was essentially equal to the 2000 top, so the market flatline. Now, this period of time is nearly identical to what happened between 1968 top and 1982 bottom. And if you remember, the actual bottom occurred in 1974 bottom, and thus the structural composition of the market at that time was very similar to what we witnessed between 2000 top and 2015 bottom right here. So it's a flatline market. From a mathematical perspective, it's very important because the market traces out geometric composition during that period of time, and that is what we witnessed since then. So since 2015 bottom right here, we've been witnesses to, I would say, a reasonably good bull market, particularly if you're investing in NASDAQ. Now, this period also very similar to what we saw between 1899 top and not 2014, but 1914 bottom. And of course, as you know, back then, afterwards, there was a bull market between 1914, topped out 1929, and we had a crash. So we are, in terms of the mathematical composition of the market, that's where we are longer term. So now that we've covered that, let me show you how we were able to call 2022 bottom with precision of, well, a surgeon, I guess, because we're actually within 1 hour resolution, not calling it on that particular day, but actually projecting it well ahead of time, and the market actually hitting the bottom perfectly. So I will include the link to this particular page, and all you have to do is to see the full report is you have to click on this link, and it'll spell out all the calculations. It'll give you a proof of what we did and why the market played out the way that it did. Just to very quickly summarize, these are our cycle composites that I talk very often about in our videos, and basically that's the 2022 October bottom. It played out perfectly, and if you read this document, you'll see not only the cycle composites, you'll see our cycle clusters. I explained it in greater detail. I just don't want to spend too much time on this document because I want to look at the market today. And these are our long-term calculations. The 2022 bottom, October 10th bottom was, I believe it was October 10 or 12th, was hit perfectly. Mathematically, this is longer-term calculations. And once again, you can verify it for yourself. I have all the data available. And these are our shorter-term calculations. That's how we're able to essentially confirm as soon as it happens that the market did indeed hit the bottom perfectly, and then it started to recover. Now, this chart is of particular interest because if you remember that period of time, I think August, September, October of 2022, if you remember the psychological breakdown of what was happening in the market, everybody was extremely bearish. Everyone was predicting some sort of a crash in the market in that October-November time frame. The economy was going down, so on and so forth. I believe, actually I don't remember anybody else, but we were the only one of perhaps a few people that were arguing that the market was about to bottom and then stage a significant comeback. Not only that, we were at the time projecting, and by the way, everything I'm telling you is verifiable. We have a 30-day trial to our service. You can log in, you can go back into those dates, you can read the reports, and you're going to be able to see exactly what we're talking about at that time. But anyway, at that time, we were projecting that the Dow Jones would see an all-time high at 40,000 or above. And actually, people were actually making fun of me because nobody thought it was possible. Everybody was gearing up for some sort of a market economic crisis or market crash. But we were giving out clear mathematical and timing indicators that the stock market was about to bottom and then stage a comeback. Now, this was our initial original target right here at 40,000, but as you can see here, these are three-dimensional calculations. As you can see here, the dark blue area is located at about 45,000. Now, dark means that there's a high probability that the financial instrument under analysis will reach into that area as opposed to perhaps a light blue as it is in this case. And that's exactly where we're standing today at 45,000. And this, I believe, give credence to our mathematical calculations and exactly what we do. So the question becomes, what happens next, or what is the overall market going to do going forward? So let me show you our recent set of calculations. Once again, I'm not trying to be, let me open this up. I'm not being as specific as I could be, and that is for a reason. But if you read between the lines, you can pretty much ascertain what I'm talking about here. So these are these are our cycle composites. And as I've indicated before, there are multiple composites running in the market at any given time. For the Dow Jones, there are at least two, both up and down, and this is one of them. And basically what they project is the bottom composites projects the bottom, and top composites are responsible for the tops. Okay? So as you can see, it was very accurate. And if you actually put it together, you get the reflection of the actual chart line or the financial instrument chart line that is as is presented on a two-dimensional chart. So the lines you see here are cycle clusters, just very briefly because we have new visitors and or watching our videos and they're not really aware what that is. But basically cycle clusters, we have a number of proprietary cycles that we developed over the years, and we have the ability to scan the chart, identify those cycles, and then project them into the future. And what we found over the years is that important tops or bottoms, and that depends on the time frame that we're working with, typically happen when there are multiple cycles arriving at any given time, as opposed to a singular cycle. So if we have 2, 3, 4, 5, 6 cycles arriving on any particular day, or date, I should say, and particularly if those cycles are powerful cycles, the likelihood of a turning point occurring there is very, very significant, as opposed to, once again, just a singular cycle arriving on that date. So this is what you see on the chart here, is these cycle clusters. So for this one, for example, I had 4 cycles, and just witness how accurately it picked the April of this year bottom on the Dow Jones. Now, Dow Jones, important to mention, is our primary analytical composite when it comes to analyzing the overall stock market because of the history involved. You know, it goes back to 1790. We don't have that data, unfortunately, with S&P and NASDAQ, so it's a little bit more prone to error. So, and then subsequently we have these lines. Now, so what are these cycle composites telling us? They're telling us that we are working into the, I'm not sure why my camera all of a sudden decided to zoom in or zoom out. Let me do this, and it's probably got tired of looking at my face. Let me try to fix it here, and then we'll go on with the video. And it's not working. Anyway, let me remove it, get it out of the way, and concentrate on the chart. Anyway, what I was saying is that we are moving into this major cycle top. There is certain margin of error associated with these cycles, depending on their length. So this particular one is probably plus or minus 2 months associated with this particular top, and as you can see, it identifies it as July 7th. Now, when we bring cycle clusters into the mix, it is becoming much more accurate, let's put it that way, to the day. Especially if we use our long-term and short-term calculations, then we can pinpoint the actual top to the day. And then subsequently, the market's going to decrease into this mid-cycle bottom. Now, don't be fooled by mid-cycle tops and bottoms. The extent of the move here could be pretty powerful and quite extensive. Particularly, we would consider this as a fast move because the period of time between a projected cycle top and a projected cycle bottom is quite short. So if you've been following us for some time, you know that we do analyze fast movers, and that is quite possibly the move here from a major top to a major bottom. Okay, and then subsequently the stock market will continue into this particular top, which would be equivalent to 1929 top, pre-crash top, and then a major crash into this particular bottom. So we still have some time before the actual crash occurs, but don't discount this period of time between this major top and this major bottom. It can be quite volatile, quite significant, and quite scary, let's put it that way. So the question becomes, where is the exact top? And let me show you some very important lines that we currently see. So this line is incredibly important for the Dow Jones, and we are approaching these very same lines for the S&P 500. So this is SPY, this is SPX. As you can see, we've reached the lines that are very important, and this is the NASDAQ NDX. And QQQ for measure, almost reaching it as well. So These lines represent very important mathematical projections in our line of work. I'm not necessarily going to say that this is the top, because this is not the information I would like to share at this point in time. But if you take into consideration these particular lines and calculations, as well as the timing parameters that I just discussed, you can come to your own conclusions. And of course, the question becomes, well, what happens after the top if this is indeed the top? To find that out, I do encourage you to ask us for a 30-day free trial. We shared all of that information with our subscribers. There's no strings attached, there's no credit card, none of that. All you have to do is ask for it. And I'll include the links to those pages as well in the description of this video. So that's about covers it. It's a little bit, the video is a little bit longer than I'd like it to be, but it is what it is. Tomorrow is important because tomorrow we're going to be looking at Bitcoin. Quite a few people have contacted me and asked me what Bitcoin's going to do going forward, and that's, I believe, a very important analysis as well. So I do encourage you to come back and check that one out, because Bitcoin is at the forefront of the overall market, leading it, let's put it that way. And it's indicative of what's going to happen to Bitcoin is most likely is going to happen to the market, or vice versa, let's put it that way. So look forward to doing that video tomorrow, and hopefully you can join us for that as well. Thank you very much for your time. Have a wonderful day ahead. Bye-bye.